celebrating 15 years of Young Turks.
Hello and welcome to this Young Turks special Back to the Basics. I'm Shireen Bhan and we're in conversation with one of the veteran investors who's been investing in India for years now, the founder of Nexus Ventures Partners, Naren Gupta. Thanks very much, sir, for joining us here on Young Turks. The startup ecosystem in India is in a state of flux today. There are a lot of past mistakes and hopefully founders and investors are hoping to course correct from here on. Let me start by asking you if what you're seeing today in terms of restructuring of operations, cost cutting, retrenchment, any of this surprises you at all, or was this just a matter of time and you were expecting this to happen?
Shireen, thanks for having me on the program. It is a pretty pivotal moment for Indian startups. And I think we are really correcting some of the mistakes of the last few years when too much money was spent building large bases for customers and so on, customers that were not likely to be very profitable and not long term. So it is really a kind of a leg in the journey, something that had to happen sometime, and I'm glad it is happening now. I certainly would have been happier if it happened a year or 2 years back, but it's never too late.
It's never too late. Let me start by asking you specifically about what's happening in Snapdeal, because you're an investor in Snapdeal. We've seen that letter, which is now public information on the mistakes the founders believe that they have made and the course correction. Give me a sense of how confident you feel that now the path towards a more viable economic model is what we can expect as far as Snapdeal is concerned, and the lessons to be learned from that story.
I think a lot of lessons to be learned from that story, and certainly we are on a path towards a viable business model, and the founders have promised that in the next 2 years they will be a profitable company, in a way the first profitable e-commerce company. What I want to say is that these founders are absolutely exceptional. Accepting mistakes takes courage. And the letter that you have seen, and of course we have seen as well, shows commitment, it shows passion, and it shows courage. And I wish all our founders had that kind of a courage to accept their mistakes and correct those mistakes and move in the right direction.
You're saying that you believe that what is now being done at Snapdeal could ensure a return to a path of profitability. But do you believe that there is going to have to be a lot more pain before we start to see a turnaround?
Well, I think there has been a lot of pain and there will be some more pain. And I think anytime you are heading towards success, there are going to be bumps on the road. And if you're not willing to accept those bumps in the road and do something about it at the right time, you're not going to have big success. The company is focusing all its resources on meeting customer expectations and not anything else. So we are pretty excited about the changes they have made. And the changes that were made, initiated by the founders, they were planned by the founders and they were implemented by the founders and the management team. So that team deserves incredible credit.
Okay.
And I wish many of our other companies, followed that path, and many of the other companies, not even funded by us, followed that path.
One of the other companies that you're invested in has also decided to take the route that Snapdeal has taken, and again publicly put forward the reasons why they are choosing to shut down at this point in time and emerge later perhaps stronger in a different avatar, and that is StayZilla. What do you believe has gone wrong in the StayZilla story and the lessons to be learned from there?
Well, I think the stories are somewhat similar in the sense that we spent too much money on acquiring customers, sometimes acquiring customers that were not going to be long-term partners for us. And the key to every success in life, whenever you make a mistake, is to really take a step back and then create a strong foundation and go from there. I want to tell you a kind of a bit of a story. I met the first woman who climbed Everest, American woman who climbed Everest, Stacy Ellison, about 15 years ago as a part of our sales meeting. And what she said was that twice they were at 26,000 feet, close to the peak, close to the Everest, but they decided to really abandon the plan to reach the peak that year. And if they had not done that, they would have killed themselves. But 2 years later, she was able to go back and climb the peak. And the lesson you learn from that is it takes courage to take a step back.
Mr. Gupta, let me ask you about the kind of uninvested capital that you're sitting on, because, Nexus touched the $1 billion mark about, I think, what was it, 2015 or 2016. You pace yourself when it comes to investing in companies both in the Valley as well as in India. What does the outlook in terms of investing look like, and what kind of capital are you now sitting on?
The world is flush with capital. There is so much of liquidity around the world in the US and almost everywhere else that capital is not going to be a constraint for new companies. What is going to be a constraint is good business model and good execution. So I think what we are going to continue to do is maintain a pace that is sort of in line with the opportunities. As more opportunities come around, we can accelerate the pace. As the opportunities seem to not be there or the pricing seems too high, we can slow down our investment. One thing we are doing that is very important for our entrepreneurs is we are keeping a lot more reserve for future fundings of existing companies. That's very important today because to a certain extent in India, the follow-on capital is drying up or has dried up in the last 12 months. Many of the hedge funds who are funding companies are not funding companies to the same extent anymore. So I think our model for what we invest initially and how much we keep for reserves also had to be adjusted.
But when we talk about follow-on capital, and we've seen a series of markdowns, whether it's companies like Snapdeal or Flipkart, etc., do you believe that we are going to see a further cut as far as valuations are concerned?
Well, I think the cut will be there, not across the board, but in a lot of the consumer companies, the valuations were ahead of the business, and I think we are going to see more reduction in valuations. The key, Shireen, is that reduction in valuations is okay as long as smart capital is available to build these companies. Valuations go up and down like in public markets. So I'm not too worried about that. I am worried about having a long-term, 2-year, 5-year, 10-year horizon when we have the foundation to build strong companies. I wouldn't really worry about too much in terms of, and in the end, interim valuations don't matter that much. What really matters is the valuation you get when you exit a company. And that is, in some cases, still years away.
Yeah. I'll talk to you about the path to exit in just a bit, sir. But let me ask you about the path to consolidation, because we've seen a fair amount of consolidation within the startup space as well. But do you believe that investors are now going to actively push for more consolidation? And do you really see the future of companies like Snapdeal, etc.? You're feeling confident today because of the measures that they've taken or decided to take, and you hope that they will pay off. But, when you're up against an Amazon with deep pockets, do you believe that there will be very little room for standalone Indian e-commerce players unless there is some mega consolidation?
I see significant consolidation, not just in e-commerce, but across the board in India. India certainly can't support 4 or 5 large standalone e-commerce companies. And I think the consolidation is also a step along the journey. So it is very likely that we are going to see consolidation. We are going to see 2, 3, 4 very large players emerge. Maybe 2 horizontal players and 2 or 3 players focus on vertical markets. So I think the consolidation should be seen as a step along the journey, as a leg along the journey.
So a Flipkart-Snapdeal merger, for instance, a Snapdeal Flipkart merger, for instance, that was a Freudian slip on my part. Do you see that as being something that makes strategic sense?
Well, it's hard to say. I don't really know enough about Flipkart. It's very hard to say.
But you know enough about Snapdeal. Do you believe that this would be a sensible move in the long term as far as the future of either of these companies is concerned?
I would say creating a stronger, larger platforms makes sense. For Snapdeal, for Flipkart, I suspect for ShopClues, and for everybody else. So I think that's the natural progress of any industry certainly in the startup ecosystem. If you look at the US, at one time there were 50 disk drive companies, and they all consolidated into 3 or 4 major companies. Once consolidation wave starts, it's like dominoes. You're going to see, if one consolidation happens, you're going to see 5 more in the next 6 months. I think somebody has to take the first step. And part of taking the first step is also creating a viable business model. I mean, you can't tie 2 rocks together and expect them to, to swim or to float. So I think each of these companies need to focus on creating viable business models. I understand Flipkart is also cutting costs and so on and improving its business model. And then you can tie the knot and have the two go places. Amazon has infinite capital, and to some extent, they also have their weaknesses. They have their strengths, they have their weaknesses. What they have not figured out is how to create sellers or how to empower sellers in India. Something like Alibaba has done very well in China, and that Snapdeal and ShopClue have done effectively in India. So I think Amazon's advantage fundamentally is twofold. First of all, infinite amount of capital, low cost capital, and secondly, they have built good technology around merchandising and so on. And I think their Snapdeal and Flipkart and everybody else is catching up to them. It's not a very difficult thing to do, but it takes time. So I think we are going to see some pretty interesting dynamics in play. I should point out that even in open markets, Amazon has not won everywhere. In Japan, they have continued to lag Rakuten, South Korea, bunch of other markets. They have been successful in US, obviously, they won the market, and in UK as well. So I would not give them carte blanche that they will be successful.
On that note, it's time for us to take a break. But when we return, we continue our conversation with Naren Gupta of Nexus Ventures Partners on Young Turks Back to Basics.
Celebrating 15 years of Young Turks.